Are you a business owner? Are you looking at your finance team and your finance department and questioning whether you've got the right structure in place? Today we're going to be looking at the differences between a CFO, so a Chief Financial Officer, and an outsourced finance department, and understand what the key differences are and when you might need them in your organisation. So firstly, let's look at an outsourced finance department. It starts with the fundamentals. It starts with bookkeeping, and that's the cornerstone of any good accounting department. Is the bookkeeping accurate? Are things being posted in the correct place? Is the VAT being correctly accounted for? If it isn't, then perhaps an outsourced finance department is what you need to look at. The second area is around month end. Does it take days or weeks to get to the figures for the end of month end? Are you waiting? Are you constantly chasing for numbers? Again, if the answer to that is yes, then perhaps there is fundamental problems in your in-house finance department, and therefore an outsource option may be preferential. Next area is around management accounts. It's really important for business owners that they can get a decent set of management accounts that gives them exactly the insight they need into their organisation. And those management accounts might be a mix of financial metrics and non-financial metrics, but it's important that they capture what the key things are and the key decisions that need to be made in that organisation. And again, if the in-house finance department is not producing that information, then an outsourced function would be able to provide that for you. Next area is around cash flow forecasting. For any growing businesses, cash flow and understanding your cash position is really important. So how much money is going to come into your bank and out of your bank? That's what it means in its simplest form. So it's really important that your finance team can equip you as a business owner with that cash position, and you can understand what the key cash pressures are going to be in the future. So that's the sort of the fundamentals of an outsourced finance department. So how does that differ to a CFO or Chief Financial Officer? Well, typically a CFO is brought in to make the more strategic decisions, the higher level decisions. And typically that resource is going to be more expensive because naturally you're bringing in more senior level resources into your organisation. So often with a CFO, they're looking at potential scenarios. So they'll be looking at scenario planning with the organisation owner, with the business owner, to work out what potentially is the right outcome or right decision to make for the business at that point in time. And they'll be looking at a whole myriad of things. They'll be looking at the internal financial performance of the business, but they'll also be looking at the wider market as well to make sure that any decision making is done with the full knowledge that they understand what's going on in the organisation, and it's also the external organisation as well. Another area the CFO can help you with is your pricing and margin strategy. It's really important for profitability that your pricing is correct and is done properly. You really need to understand how the changes in prices affect your margins and affect your bottom line. And the CFO can help you with that because he'll get right into the detail to understand what your cost base is, what your margins are, and therefore what potentially your pricing should be. Another area CFO can help you with is getting your business investor ready. And by this I mean if you're growing and you want to bring equity investment into the organisation, having a CFO on board can really help you with that. Firstly, it gives you credibility. So if the investor is looking at your organisation and you've got a CFO on board, or even if it be a fractional CFO, you're likely going to be more credibility because they're going to be able to talk to that CFO about the organisation and get the answers that they want. And also, if you're looking for external funding, perhaps that's from the banks or other lenders, again, having a CFO on board will add credibility to your pitch to get that funding, and may mean that lenders are more likely to lend to your organisation. So what does this all mean? When would you use an outsourced finance department? When do you really need a CFO? Well, the answer to that is you need to get an outsourced finance department on board. If you're at a point where you just don't trust the numbers, you don't understand what's coming out of your finance department, if that element of trust is not there, that's the sort of key priority for getting your outsourced finance department on board and working for you. If your month end is constantly late, if the numbers don't make sense, again, you need to be looking at an outsourced finance department. And when would you use a CFO? Well, that's more for the bigger decisions, the bigger calls. The areas where you think, this decision is fundamental to my organisation. If I get this right, I'm going to do well. If I get it wrong, it's going to potentially hurt my business. That's when potentially going to need a CFO on board, because then you can bounce ideas off that CFO. You can get their counsel to make sure that they understand your position, and then they can advise you appropriately around making those bigger calls. So in overall, the answer is you probably need a combination of both. You need to make sure the fundamentals are right with the outsourced finance department, but for the bigger calls and those bigger areas, that's where you need a CFO on board. If this has been useful, please like and subscribe to our channel.